that. So now this session is being recorded. And again, thank you very much for joining us. Let me share my screen. So the things that we're going to cover in this session includes the following. We're going to talk about some of the ground rules, and primarily the ground rule is if you can put your questions in the Q&A. If you choose to use the chat box, you'll be chatting with the panelists and everyone else. But for us to monitor your questions and make sure that we get to those, please make sure you use the Q&A function. We're going to review some of the economic injury disaster loan updates and deadlines. There's not a whole lot we'll cover about that, but we are getting that question quite a bit. We're going to talk about the stimulus package that was approved or signed by the president on December 27, 2020. We're going to update on the PPP numbers and go through navigating PPP updates, calculating forgiveness, and then we're going to talk briefly on the application process. But most importantly, we want to get to your questions. Between Anna and Brian, we're going to try and answer your questions real time as you put them in the chat. And if there's things that we want to make sure everyone hears at the same time that we didn't cover in the presentation, we'll cover that as well. So the economic injury disaster loan was slated to expire December 31, 2020, and it was extended December 31, 2021. You can get the application. You are applying directly to the SBA and its disaster relief efforts on the website. And you can go to covidrelief.sba.gov. You can go to sba.gov and then follow the navigation tools to get to that. That application is for a loan that's 3.75% amortized over 30 years, and it is a fixed rate loan. Oftentimes in the first round, when the pandemic was first declared, people were trying to get on the EIDL website and it was crashing and people were having a number of different issues. I think it's a bit better now, but if you run into issues, this presentation will be on our website, but there's a disaster assistance customer service phone number as well as an email address for you to address any of your questions. disastercustomer@sba.gov is the email address, and then there's an 800 number 659-2955. That for the economic injury disaster loan. The stimulus package that was signed that included the Paycheck Protection Program also included several other benefits for small businesses. And I'm going to focus on the benefits related to the Small Business Administration and the SBA, and thus SBA loans. So one of the benefits is if you have an SBA loan, whether it's an SBA microloan, an SBA 7A loan, a community advantage loan, or SBA 504 loan, your principal and interest payments will be paid for you up to $9,000 per month beginning February 1st, 2021 through April 2021. So if you have an SBA loan, and your lender will be contacting you to let you know about that benefit, whether it's a microloan, community advantage, 7A, or SBA 504 loan. And of course, we are an SBA microlender and we're an SBA 504 lender, and so we're notifying our clients of the same. If your business is growing and you have an opportunity to get a new SBA loan, and I will say as a partner of the SBA in the SBA 504 loan. There's some really great benefits in getting an SBA 504 loan. And if you have a conventional loan, the opportunity to refinance your conventional loan to an SBA 504 loan, or the opportunity to refinance a variable rate 7A loan into a 504 loan, where you have a first trust deed, a fixed rate second trust deed for 25 years. Our SBA second trust deed today is 2.6% amortized over 25 years. So there's some great benefits in the SBA program and in the refinance program that can benefit a lot of small businesses that want to pull out equity out of their commercial building and use that to help them get through rough periods with the pandemic. But in any new SBA loan will have principal and interest payments made up to $9,000 per month for a 6-month period. So from February 1st, 2021 to September 30th, 2021. If you are in one of those hard hit industries, the 72 NAICS code and some of the education and other fields, principal and interest payments will also be made for you if you have an existing SBA loan from February 1st through September 30th, 2021. So please make sure you look out for those announcements. Another component of the new SBA loan is that when the act was enacted, when the president signed the bill December 27, 2020, anyone who gets a new SBA loan, the fees are waived concerning your SBA loan. So there's a guarantee fee, there's a CDC processing fee on the SBA 504 side, and on the 7A side, you have an SBA guarantee fee, plus you have a bank participation fee. Those fees are waived, and the regulations say once the bill is signed or enacted, and that was enacted December 27, 2020. So you will receive the benefit of fee waivers with the enactment of the bill. Again, if you have questions on that, we can certainly talk to you about that and give you more details, but some great benefits for small businesses who are getting an SBA loan or who have an existing SBA loan. And if you're getting an SBA microloan, another program that we also do, the terms is extended. So the typical term for an SBA microloan, these are loans up to $50,000, is 6 years, and that term is extended now to 8 years as a result. We're still waiting on the details of how some of these things are going to be implemented, but we wanted you to have that latest information and look out for it, because we'll be posting it real time as soon as we get that information. So now to talk about PPP, the Paycheck Protection Program. The deadline to apply is March 31, 2021. It is first come, first served based on the amount of funds that are allocated, $284 billion. One of the things that the act did is target women and people of color in underserved communities and veterans to try and make sure that what happened in the previous rollout of the Paycheck Protection Program does not happen in this rollout. So to open up the Paycheck Protection Program for new PPP borrowers, the window opened today for you to be able to, or for the small business to be able to apply and have their application submitted for the Paycheck Protection Program. Only though through community financial institutions. That's certified development companies like AmPac, or community development financial institutions like AmPac, minority depository institutions, or microloan intermediaries. In addition, there's this um, lender match on the SBA website that allows people to go through lender match and try and find a lender that matches what their question is. They will direct those inquiries to CDFIs or community financial institution. And they're setting aside time specifically for these entities that are designed as they are mission-based lenders seeking to serve these underserved communities, to ask questions and to be able to make sure that those applications get processed efficiently. So again, first round is open to new PPP borrowers, and that's from today through the 13th, until the 13th. And then those who have a current PPP loan and you're looking for a second draw, that's a new term in the regulations. It opens up for CDFIs or community financial institutions to be able to apply on your behalf on January 13th. It is best, I'll say this up front, if you're looking for a second draw PPP, it is best for you to go through your financial institution that you originally got your PPP loan with. However, if your financial institution, and we've heard this from several people, is not doing PPP loans in this new round, then you're welcome to go to any other institution, and you're certainly welcome to consider coming to AmPac, although we limit our PPP loans to the smaller dollar loans under $50,000, except for existing clients. So eligible businesses and nonprofits, a small business concern under $10 million in revenue, independent contractors, self-employed individuals, sole props, tax exempt nonprofit organizations or veteran organizations, including religious organizations, churches are eligible to participate in PPP. Must have 500 or fewer employees, including affiliates. This is again for new PPP borrows, not second draw. The regulations are different, and you'll hear me talk about that. Housing cooperatives, news organizations, ESOPs, employee stock ownership partnerships, and then, of course, businesses in operation on or before February 15, 2020. So those are some of the requirements that were in place in the first and second round of PPP. The interest rates and terms are the same. Interest rate 1%, term 5 years, maximum loan amount 10 million. It is 100% guaranteed. There's no collateral required and no personal guarantees, consistent with the previous. Again, I wanted to emphasize and put this slide in for self-employed individuals. Because we do smaller PPP loans, we do get a number of questions about this. So that self-employed individual has to have been in operation since February 15th, 2020. As I mentioned before, same requirements. They have to have filed a 1040 or Schedule C. And partnerships are eligible, but limited to partnerships, not the individual partner. That's an important point we often got a number of questions on. The eligible uses of the Paycheck Protection Program funds are the same as in the previous round: payroll costs, healthcare, mortgage, mortgage interest, rent payments, utility payments, any debt obligations prior to February 15, 2020 in terms of interest payments, they're eligible. The salary and wages or the payroll costs include the same kind of requirements that were in the first round. I just want to point out this cash tips or the equivalent if you're working in the restaurant area. Tips are eligible. You just have to be able to document the record for that. And the burden of proof is on you, the small business owner, not on the lender. And then I want to point out on the bottom of this slide for independent contractors or sole proprietors, wages, commissions, income, or net earnings from self employment or similar compensation, all of that is rolled up in your payroll costs. So, some of the new requirements that are eligible for this new round of PPP funds is in other parts of the country, people had an idle loan that was made from January 31 to April 3rd, 2020. Those are also able to be refinanced in the PPP loans. Other covered expenditures have to do with what we experienced in 2020. So, operational expenditures, if you needed to make your um, business more technology friendly because of PPP and you did cloud computing services for your business operations, or you started a new processing payment or tracking system for your payroll expenses, or accounting or tracking of supplies and inventory, all of those things are able to be covered under the new other than payroll costs. In addition, covered property damage. So in 2020, we had a number of public disturbances, and those costs to improve your property from damages above what insurance companies are covering, you're able to include that in your paycheck protection. And then finally, covered costs associated with making your business COVID-19 friendly. So expenditures to for essential operations of the business in terms of PPP, PPE equipment, and the like. And here, any supplier costs. Maybe you had inventory at the time of the pandemic, and some of that inventory and those supplier costs were expended, and yet you couldn't sell it because your business had to be closed. All of those can be rolled into other costs other than your payroll costs. In addition, um, what I was mentioning earlier, the protection equipment, including if you needed to create outdoor dining or a drive-through, those are areas that can be included in your Paycheck Protection Program loan, as well as equipment, face piece respirators, or other protective equipment that's required. That can be included in your other payroll costs. The requirement for 60% of the funds to be used for payroll and 40% to be used for other costs is still the case in this round of PPP. So, new borrowers, new Paycheck Protection Program borrowers may use their 2019 payroll reporting data, recognizing that in 2020, payroll costs could have been skewed because you had to reduce employees because the business may not have been open or any number of other reasons. So, the 2019 figures could be used versus 2020 to calculate your maximum loan amount. Ineligible payroll costs are consistent with what we saw in the first round. Only people who are in their principal place of business is the US. Any employee cost above or in excess of $100,000 cannot be included. Federal employment taxes imposed or withheld can't be included. And then qualified sick and family leave that's been covered by the Families First Coronavirus Response Act, that can't be included as well. How do you calculate the payroll protection program loan amount? Is consistent with how it was calculated in the first couple of rounds. It's your aggregate payroll cost based on your 2019 tax return or payroll numbers, less any employees that have over any employee salaries above $100,000, you divide that amount by 12, you multiply that monthly average by 2.5, and then you if add any amount of the idle that you wish to refinance. Again, this is more relevant to other parts of the country for idle loans that were done between January and April of 2020. And if you received an idle advance in the first round, you remember that had to be deducted from your PPP loan. Well, the legislation eliminated that requirement. In fact, if you got and submitted your Paycheck Protection forgiveness and they deducted the idle advance, that those funds are going to be refunded to you by your lender, and the SBA is still working through how that's to be done. But if that was deducted from your Paycheck Protection forgiveness, that will be refunded to you, and you can check with your lender on that. So in this round, you have first draw PPP loans uh, defined and second draw PPP loans, and it's just as it sounds. First draw, this is your first PPP loan for the small business. Second draw, you received a PPP loan, you've used up your PPP loan, or you will use up your PPP loan before your second draw is dispersed. So those are the two different ways the PPP loan is described in this round. For those who are eligible for second draw PPP, you got a first draw PPP, you've used all of it, or you will use all of it. The requirements are different. So please take note. It has to be a business with 300 or fewer employees. You remember when I talked about the first draw, it was 500 or fewer employees. However, if this is your second draw, it's 300 or fewer employees, and you have to have experienced a revenue reduction in 2020 relative to 2019. And we have to do that calculation and look at those two numbers. So, as I mentioned earlier, you received a first draw PPP, you've used all of it or will use all of it. Maybe you've gotten your forgiveness, maybe you have not, but you have used all of that disbursement. You can then apply for your second draw PPP loan, and it won't be dispersed until all of your first draw has been dispersed if it has not already. You will have to demonstrate a revenue reduction requirement of 25% or greater when you compare 2020 and 2019. So it's multiple ways that's calculated, and you may not be able to see that too clearly on the screen. So let me make it clear. You calculate this revenue reduction either quarterly by looking at each quarter, which means that we will have to have interim financial statements to document that reduction. So if Q1 you did not have a revenue reduction and Q3 you did have a revenue reduction, and you're comparing that to 2019 Q3 of 25% or more, then you would be eligible. If you look overall between your 2019 and your 2020 tax returns, and you say, I haven't filed my tax return, but you have year-end documentation of 2020, or if you're a sole prop, you can use the form, the Schedule C form that's on the IRS website to complete that to show the difference between your 2020 and your 2019 tax return, and it shows a 25% revenue reduction, then you'd be eligible for a second draw PPP loan. Uh, any forgiveness amount of your first draw PPP loan that you received in calendar year 2020 will not count toward your gross receipts. So that's an important point. I've had a lot of business owners who were questioning whether the 2020 forgiveness should be counted as part of their revenue. And the SBA and the regulation has clearly indicated that your PPP forgiveness should not be counted within your gross receipts for you to measure the difference between your 2020 and your 2019. And finally, if you received PPP in the first round, your aggregate loan amount, can't be more than $4 million between the first round that you received and the maximum $2 million that you can receive in the second round. I'm going to pause right there and see if there are any questions, Brian or Anna, that need to be asked verbally, because there's a lot covered between those two. Were there any questions that you needed to ask verbally that you think everyone needs to hear? Maybe taking themselves off of mute. Any questions that we need to cover?
We
Okay.
have been able to answer majority of the questions inside of the chat.
I'm sorry, I don't, Brian, we can't hear you. Can you speak up a little bit?
Yes, sorry about that. But we have been aiming to keep all answers inside of the chat. Accordingly, if there are any that have not been answered, please feel free to pop them in a Q&A and we will aim to answer them vocally. One question that just came in from Adam Russell. He asked if company prepared financial statements are acceptable to the SBA.
Company prepared financial statements are acceptable to the SBA in looking at the second draw forgiveness because it's so early in the year. But the burden of proof, and we'll talk a little bit about that in terms of the certification and the rest of the presentation, the burden of proof will be on the small business owner to make sure that that documented difference between revenue in 2019 and 2020 is 25% less for the second draw. Very good question. Thank you, Adam. So I'll continue and then I will pause again to answer any more questions. So we've talked about the calculation for PPP loans, that is the same for each as it was for the first two rounds of PPP. But what we want to make sure we cover is how that relates to businesses that have been hard hit in certain categories. And in particular, the regulations call out the 72 NAICS code for businesses. Um, any single business that's assigned to this NAICS code, and that's food and accommodations primarily, is eligible to receive a second draw PPP loan if it employs no more than 300 employees per physical location and, please note it's and, meets the revenue reduction requirements. However, these businesses who are in this NAICS code, their change in calculation goes from the 2.5 times of the annual monthly revenue to 3.5 times the annual monthly revenue for the payroll costs. So again, if you are not in the 72 NAICS code, your calculation of your payroll costs and the maximum loan amount is based on your average monthly payroll cost times 2.5 times. However, if you're in a 72 NAICS code, your monthly calculation is based on 3.5 times. I got a question earlier that if I support businesses in the 72 NAICS code, and clearly my business has been impacted because I serve restaurants and I serve hotels and I serve the food and accommodations industry, could my loan amount be calculated at 3.5 times? And what I shared with them is, as of now and in reading the regs, there is no provision for supporting businesses that support businesses in the 72 NAICS code, such that their maximum loan amount would go up to 3.5 times as well. I do think it's a really good question. I do plan to ask the questions in some of my calls with Treasury and SBA, but as of right now, the designation um, approved and adopted by Congress is only for businesses with the NAICS code of 72 food and accommodations. So again, in calculating the second draw for the second draw loan amounts for PPP, the maximum loan amount is $2 million, and the calculation is the lesser of 2.5 months of the, or is the 2.5 months of the borrower's average monthly payroll costs, or said differently, the average monthly payroll cost times 2.5 that I just went over. And then looking at the relevant time period for calculating payroll costs, either the 12-month period or the quarterly period, whichever gives that business the best benefit for being able to meet the requirement, showing a 25% revenue reduction. On the documentation requirements for second draw PPP clients, again, substantiating your calculations, either looking at company prepared financial statements, as was asked in one of the questions, or looking at tax returns or draft tax returns comparing 2019 and 2020 tax or financial statements. Um, Additional documentation is not required if you're using the same lender that you used before in terms of your payroll costs, but we will have to use information to document the difference between your 2019 and your 2020 revenue calculation in order for us to be able to um, substantiate the need for a second draw and qualification for a second draw PPP loan. Other second draw requirements: if the principal amount is greater than $150,000 in the request, the applicant also must document with adequacy to the lender that calculation to show the 25% or greater drop in revenue. And I would submit to you that either way, whether it's over 150,000, because this was taken directly from the regulations, or under 150,000, the burden of proof is on the small business owner. However, the lender will be audited. Now, we're advised that as a lender, if we do the loan under $150,000, we will not be held harmless or be subject to any issues if we don't have that documentation. But as a prudent lender, we want to collect that information and make sure that that revenue calculation has been substantiated. So whether that's substantiated by internally prepared financial statements or tax returns, the goal is to just make sure that it's substantiated. And since we're doing loans under $150,000, we're going to collect that information, get your signature on it. But if there is an issue, the small business owner will have to certify that that information was true. Other documents that are required are consistent with what was required in the initial round. For first time PPP borrowers, we need your 941 or other tax forms that document your payroll, quarterly wage insurance tax reporting forms from each quarter in 2019 or 2020, whichever one we're going to use for you, or equivalent records from a payroll processor, Paychecks, ADP, and other processors. Sorry for those who do that, and I didn't give you a shout out. But any of those records, they keep great records that your lender is able to utilize. And then a payroll statement or other similar documentation from the pay period that covered February 15, 2020 must be provided if you were a newer business starting on or before February 15, 2020. Um, for the self-employed, the driving force in the documentation is going to be your Schedule C, 1040, Schedule C tax return. And again, if you have not filed a 2020 tax return and this is your second draw requirement, then we're going to need a copy of that draft 2020 tax return to do that comparison. In addition, we can use invoices or bank statements or other records to establish that you're self-employed, and that information on your payroll and what you've received is available from some of those records as well. If you're self-employed and you have employees, then we're going to again utilize the Schedule C and then do the multiplying or dividing by 12 to get the average monthly payroll amount, and then multiply by 2.5 to come up with the total payment, less any income over $100,000 in terms of payroll. Again, the calculation breakdown, I think I've reviewed that pretty thoroughly in terms of how we're calculating the payroll costs plus your benefits, plus tips. All of that's included in payroll costs. Employer contributions for employee group health, life, disability, vision, and dental insurance, all incorporated. Any contributions of retirement plans, and employer, state, and local taxes are all incorporated into payroll costs. And that's what's multiplied, that's what's divided by 12 and multiplied by 2.5. Seasonal businesses are also eligible for the Paycheck Protection Program, and seasonal businesses, you'll be looking at the seasons in which the business is actively operating for a 12-week period to do the calculation. Hospitals owned by state or local governments that receive less than 50% of their funding from state and local government resources are also eligible, exclusive of Medicaid, and those Medicaid benefits. Also note, I did get a question from Peggy. I'm glad to see you on, Peggy, about 501c6 organizations that were not eligible in the first round, but they are eligible. There are some exclusions for professional sports leagues and organizations that participate in political campaigns or lobbying. But if an organization is a 501c6 and they don't receive more than 15% of their receipts for lobbying activities, they are eligible. Lobbying activities of the organizations that do not comprise more than 15% of total activities of the organization also make the organization eligible. And then any other factors associated with lobbying that do not exceed $1 million during the most recent tax year of the organization also make them eligible. The organization does have to have less than 300 employees to be eligible. I'll pause there and see if there are any questions, any additional questions about 501c6 organizations or anything that I've mentioned thus far that need clarity. Okay, hopefully everyone, and we're keeping up with all of your questions. And ineligible activities are still the same ineligible activity from the first rounds. The key things that I want to point out though, we've gotten this question a lot on housekeepers and nannies. They continue to be ineligible. We've also gotten questions on if my business was open and I've had to close my business, is it eligible? If your business has been permanently closed, it was open in 2019 and in 2020 you permanently closed the business, it is not eligible for the Paycheck Protection Program. If the business or owner has filed a BK or plans to file a BK before the loan is dispersed, that business is not eligible to participate in the Paycheck Protection Program. I know there's been a lot of questions about that, but those guidelines have been provided and pretty clear. And finally, I do want to point out this other, if the business obtained a loan from the government that was defaulted in less than 7 years or 7 years or less ago, so the business received a government loan, whether that's an SBA loan, a HUD loan, a USDA loan, an EDA loan, any government loan, and it was defaulted in less than 7 years ago or caused a loss to the government, that business is not eligible to apply. Again, the others were clear in the first round. Um, Lenders have to comply with the requirements of the rule. There is special note that we will be held harmless if a borrower fails to comply with the program criteria or misrepresent information. We're going to do everything that we can to collect the information and document that what the borrower has said. We have documentation and have that in our file, but we are held harmless according to the Act and the regulations associated with the Act. So in considering forgiveness, loan forgiveness, there's a covered loan period, and you as a business owner gets to choose between an 8-week or a 24-week. It's your choice for the covered period. You know, you might remember in the first and second round, you had to choose. You don't have to, you had to either do 8-week or 24-week. You do the covered period that meets your best need. Forgiveness must be completed within 10 months after the covered period of whichever is chosen. And again, 60% of the Paycheck Protection Loan proceeds must be used for payroll costs in order for it to be eligible. And for purpose of loan forgiveness, the borrower will have to document that the proceeds used for payroll costs have been used in fact, for payroll costs up to 60% in order for there to be forgiveness. That's consistent with the other round of funds. Loans under $150,000. The only thing that I wanted to mention on this, I was on a call today with federal regulators. The guidelines have not been issued on how they are going to streamline forgiveness for loans under $150,000. But what you should be aware is that that is a streamlined application process. And from the perspective of the lender, the onus is going to be on the borrower for any audit purposes associated with getting forgiveness for loans under $150,000, assuming that the loan proceeds were used for the purpose it was intended, meaning 60% of the loan was used for eligible payroll costs and 40% were used for the eligible business expenses that we documented. As a business owner, small business owners, the certifications are fairly consistent with what they were in the first round, that the business was in operation February 15, 2020. It has not permanently closed. You were either you're either an eligible self-employed individual, independent contractor, or sole prop. You've had employees for whom you paid salaries or payroll taxes or paid independent contractors. Independent contractors, again, have to apply as independent contractors. They cannot apply under the employee category for a company, but you have to document if you have employees that you have paid salaries and payroll for those employees. Because of the current economic uncertainty, that's why you need those funds. That's why you apply. The funds will be used to retain workers and maintain payroll that we talked about. If the funds are knowingly used for unauthorized purposes, you are certifying that the federal government may hold you legally liable, such as charges of fraud. Loan forgiveness will be provided for the sum of the documented payroll costs or covered mortgage interest or all of those other covered expenses that we mentioned, but no more than 40% of the forgiven amount may be for non-payroll costs. You're further certifying, if it's required, that the applicant will provide the lender or SBA documentation verifying that the number of full-time equivalent employees on your payroll records and the dollar amount of eligible expenses for the covered period following the loan is consistent with what you submitted in your application. And the applicant has not and will not receive another loan under the Paycheck Protection Program. And the the small businesses that are getting a second draw has to certify that this is the last Paycheck Protection Program loan that you'll receive. And the applicant hasn't received this shuttered venue operator grant that SBA offered as a result of some of the civil unrest that occurred in 2020. The other certifications describe you not being a government employees or working for the Securities Exchange or knowingly making false statements to obtain a guaranteed loan, or or you're otherwise not eligible to receive these proceeds, and you know that, and your lender does not know that. And that concludes the presentation, the formal presentation. Anna, Brian, let me know if there were questions that we missed or things that we did not cover from the chat. And we can try and answer those. I'm looking at the Q&A right now, and I'm seeing a question from Sam. Is there a max percentage of money used for rent like the old PPP? And hopefully I answered that. The maximum amount for rent and other expenses is 40%. And then I think it's Evan asked if I'm a sole prop without employees except myself, which means that you are an employee, absolutely, and haven't taken my draws myself as an employee of my business because it was a startup or whatever was made was spent on the business. I do plan to use funds to hire back support. Do they have to be do they have to be employees, or can they still be independent contractors? Independent contractors have to apply on their own. There is an assumption, Evan, for sole proprietors that you are the single employee. And so as a result, the net income shown on your tax return is considered your payroll. That being the case, you can still apply for a PPP loan. I see that you mentioned you're a startup. So again, make sure you pay attention to those dates. We do need to see a filed 2019 tax return. Um, or if you have not filed, because you would have had to be in business February 2020, we should have some documentation of your activity in 2019 as a startup. Whatever your net income was, you average that by 12 months or divide that by 12, multiply that by 2.5, and that is your salary contribution, or that is your payroll amount. So I hope I answered that question. And if you want to talk more offline, um, Anna or Brian can certainly answer further questions on that.
Hilda, there were a couple of questions that were asked and I didn't have a response because I don't recall it right off the top of my head. And one of them was from Steve Fajardo. He
Okay.
asked if he was refinancing his 504, no, his 7A into a 504 loan, would there be a prepayment penalty?
It really, Steve, depends on how your loan was structured. If you're refinancing it into, and we're still waiting on all the regulations on how that's going to be. But if your 7A loan is within 3 years, which is when they usually have the prepayment penalty with 7A loans, then yes, it may have a prepayment penalty. But oftentimes, prepayment penalties are, you can roll those up into the financing and include that within your loan. Again,
Okay,
we don't have all the details about how SBA is going to structure the requirements for the refinance of a 7A loan, but certainly once we get those details, if history serves us right, prepayment penalties are eligible to be rolled into the loan expense.
okay. The other question was from another existing client that says, I haven't answered it yet, but I thought it was a good question. We had close to 20 employees, but since they had to close down, they're down to 6. Do I need to do some rehire to get back to close to the 20 employees? We are still shut down since we are an indoor trampoline facility.
Yeah, that's a very good question, Sam. And looking at the regulations, you're looking at your 2019 numbers and doing a comparison. So if the regs are not saying that you have to hire back those 20 people, but you still do have to get to the 60% of your payroll costs for your loan amount for getting forgiveness for that loan. So you will be looking at your 2019 numbers when you had perhaps 20 employees at that time, and comparing, um, and you're going to compare to show your 25% reduction. And so you'll get your revenue calculation will be there, but we'll be looking at your 2019 numbers that you submitted for the second draw PPP.
Now, the other thing is, since we did a maximum loan of a certain amount, say 50,000, he if he did not have, if his payroll exceeded that amount, um, and now qualifies for a different amount, will we take that into consideration?
We absolutely will for any existing client.
Thank you. I just wanted that clarified.
Thank you. Thank you, Ann. Were there any others? Someone mentioned I haven't found, Benita mentioned I haven't filed my 2019 taxes yet. Can I still apply and then upload the return once it's completed? You need to file your 2019 tax return. If you are a sole proprietor, Benita, and you can pull that information off of the IRS website to get a Schedule C and prepare that Schedule C so that you can get that filed. But we do need to have that information on the IRS form documenting what your revenue and expenses and payroll costs are.
Hilda, perhaps we can include that website on our Q&A.
Perhaps we can include
The
what website?
IRS website where she can look that up. I'll look
Yeah,
at it. Okay.
she can. You can type in the chat irs.gov, where you can get the IRS form, or you can talk to your CPA. But at this point, because 2019 tax returns should have been filed, you should either have that or a draft if you're on a special extension. Andy asked, since I'm a sole prop, I base my annual income, your net income, divide by 12 months, 2.5 times to be my max loan amount, and that is correct. And Stephanie, the revenue number is based on gross revenue, not net income, gross revenue. And that's how we will calculate the change on the second draw. Your gross revenue of 2019 compared to your gross revenue of 2020. And I think we've answered the other. There was a question on company prepared financial statements, which I believe we answered. If no, a tax return should have been filed in 2019. You can use a company prepared for 2020 so that we can evaluate the revenue costs. And David, thank you so much for adding your information. David has helped a number of clients get their tax returns completed and help people with their business plan. I'm going to drop this also into the chat in case you all missed that. And he's a wonderful resource and one of our clients who's been very, very helpful to a lot of our small business borrowers. So if you don't know David Namazi, you might want to get to know him. He's been really helpful. With that, we are at our end time at 4:30. You have been great. We will be doing more of these. We'll be updating the information with real-time information that we receive. If for some reason your question was not answered, we'd encourage you to email us at ppploans@ampac.com. Again, ppploans@ampac.com, and we'd be happy to answer those questions or special questions offline. We absolutely look forward to serving you, whether that's in our current loan programs, our SBA microloans, or 504 loans through our CDFI, or through PPP. And for those of you who have not submitted your application for the California Relief Grant, that is still open. It closes on January 13th at 11:59 p.m. And you can go to our website at ampac.com for more information on that. Again, thank you so much for joining us, and we look forward to being in touch and being a resource for you.